checking out Apple here on the weekly chart first. We are currently sandwiched here in between the fifth term 61.8 at 257.74 and the secondary 38.2 at 243. We see that if we go down into a daily, there's a little bit more volume above price, but really everything building out almost equally here within this range. If we do lose that 243 to 245 area of support, then we would look for that final move down into the 220, 232 range, where there's that larger node of volume as well as the primary 23.6 there and the channel up, longer term channel up from back in 2023 as well. All here around that general range, 220s, 230s area. So if we do lose 243, that would be target. If we do make it back over 257, then 264 and 271 as resistances. Into Microsoft here. Microsoft Weekly. Again, we've made a good portion of the move out of this already. We lost the high volume node up here in the 500s. Now we've lost the 400 node on our way likely to test the node here in the 330 range. We do have retracement, the primary 38.2 here at 343, so 330 to 343 likely to blunt the speed of this drop, at least to kind of consolidate up into this range from 330 up here into probably 400 range, so long as there is some sort of resolve to the current issues globally. Into Tesla here. First, let's go out into a weekly chart for Tesla. Pretty mid-range of this channel. We have a support at 347.17, the secondary 38.2. If we go into the daily, we can kind of see the volume profile laid out a little bit better. In the low volume node right here in red, and just a little low volume in general, we do have that larger node of volume starting here at 347 and really working all the way down into the 320 range. So we would look for this probably 322 to 347 area to again blunt the speed of the drop, so long as we can get that resolve. This is the Amazon chart. And sorry if I keep saying if we get the resolve. The problem is with a lot of these, like, you have supply demand issues, you're going to have increased cost, you're going to have inflation, you're going to have all of these things that likely are going to damage the ability of stocks to bounce meaningfully until there is some sort of resolve. I mean, if crude makes it to 150 on CL, we're going to have some real issues. I mean, really anything over 100 is a problem. But anyway, Amazon here, 140 or 197, 198, primary 23.6, and the tertiary 61.8 kind of laid over there, as well as the uptrend from back in 2023. We came down hard into this support back in February, held it, bounced, tested resistance at 219, and now we're back. So for now, just consolidate of 197 into 220, but any risk lower opens into that 185.92 there as well, with secondary support closer to 160, 170, but then of course we lose the trend from 23 there, so that would be problematic. This is Google. Google really hard wash last week, coming off that 300 support loss. Plenty of volume up here on range, and now we're just kind of moving through 244, 251. You would think probably catches this for a little bit. Quite a bit of volume up here though relative to this node down here. If we do something, like this for example, there's roughly 3 billion shares traded, 3.09 billion shares traded, and down in the range down here, there's like one point, you can't see it, but it says 1.3 billion, right? So 1.5 billion needs to sell, and this needs to catch that. So it would be close. We'll see what happens again. Events, etc., etc. But for now, especially even if we go down into the daily, we see that loss of that high volume node right in blue, and we have the volume supportive down here, 240 to 250. Looks like there's also an uptrend here from back at the beginning. This is from 2025 April. On Google, and that's right here about 244, 250 as well. So if 270 fails to catch or 269.36 fails to catch, then that cleans up everything in this area. It retests that to kind of blunt the speed of any drop. And into NVDA. NVIDIA just now starting its move, really. On the weekly, you can see that break of the uptrending support. Lost it 2 weeks ago, retested it, lost it again last week. This is the daily chart. Again, just not a lot of volume flow through this entire range from, really from 175 all the way down into 150 there's almost nothing, especially from 168. If we do something like this. There. 1 second. Just kind of wanted to. There. Kind of show you where that is a little bit better. There we go. And so, this range from 168 all the way down into 150 really just lacks any amount of volume, and we know we're coming from this major node up here, so half of all participants above this are going to start to become sell side, and the further they get away from basis, the faster those sells are going to come through. There's really no volume in here to catch that, so if no one's placed orders here, there's not going to be any demand for orders here now, which suggests that we break 162, 164, and we test down into that 150 range or 149 range at a minimum, though the high volume node doesn't even exist down here until 135 to 140. So realistically speaking, if things continue down the course they are, we could definitely see NVIDIA 135, 140, but support 1 is 162 and support 2 is 149. So clearly there are issues in underlying stocks, especially the top weights. Again, if we don't see a resolve to the issues occurring overseas, then this will become more problematic with crude going up. I guess we can just look at crude real quick. Oh, no, we can't, sorry. So anyway, if we have these problems and that continues to reoccur, then we should see all these stocks continue to move through these poor pockets of profile. The real question just is, do they come down one by one, or do we see them all come down at once? If we all come down at once, how far down does that bring the market? And so that'll just be something we need to watch for next week. We do have the JPM caller that comes off on Tuesday as well, which could create issues. So hope everybody has a great night, and see you back here tomorrow.